Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by Deon Kondleka, market maker at Cloud Atlas Investing, for an update on the recent listing of the AMI Big50 ex-South Africa Index. Deon, thank you for joining us.
Thank you very much.
This is kind of a big deal. First of its kind listing, certainly in the South African market. How did the day go? What's the investor appetite looking like?
So to go back onto the day we listed, which was on the 20th of April, right? So the day for us was fantastic. We went to the JSE, we were able to meet a lot of the potential investors who came to celebrate the day with us. Like you said earlier, it's the first of its kind.
Right.
We are bringing the 50 most representative stocks, especially the blue chips across Africa, and we're bringing those right through to the JSE to allow local investors to participate in what they call the true African story.
Right.
Right. So moving forward from that, we issued a couple of units into the market. We were able to tap into the retail market where a lot of people were saying, we want to know, what are we really investing in? What is this Africa story everybody's talking about? What is this opportunity, and how are you bringing this here? So what we've done on our side, which I believe is very, very key, is that we said, there's this whole entire world of Africa, right? And there's a whole lot of stocks in there. There's a whole lot of companies, a whole lot of different sectors. And we said there's a couple of challenges that people are worried about when it comes to Africa. We're talking about your liquidity challenges. We're talking about the governance challenges that everybody talks about, political uncertainty.
Right.
Right. So we said, let's take all those concerns. Let us now then choose the most representative stocks that actually cater to all those concerns investors have. So we said, okay, who's the most liquid? Right? Let's choose the most liquid stocks, let's put them aside. Who are the biggest in their various sectors? Because we don't want to buy into Africa and just buy into banks alone. We don't want to just buy into food and beverages alone. We don't want to buy into just telecoms alone. We want to make it truly diversified.
Right.
So we went and said, okay, who are the big guys here? So we will have Morocco in there, we'll have Egypt in there, we'll have Kenya in there, and we'll have Nigeria in there, Tanzania. So we just decided to say, okay, we've got this universe. Now let's choose the countries that are going to represent Africa. Let's choose the sectors that are going to represent Africa, and make sure we don't buy into something that people can't really buy in real life. So if there's a liquidity issue in a certain stock, we stay out of that stock. And stocks that do show that they've got liquidity, stocks that do show that they've actually traded over the last year or over the last 2 years, let's bring those stocks across.
Okay, let's take a pause for a second and touch into, I guess, the mechanics. So I'm sitting at home watching the show, and I'm like, this is an awesome product. It sounds phenomenal. I invest a couple thousand rand of my money. What are the mechanics? Like, how do you then take that money and translate it into investing in these Big 50?
In this Big 50.
Yeah.
Right, so one of the most important things I have to just highlight is that the ETF that is actually issued on the JSE, it actually tracking an index, which in itself is called the AMI Big50 index.
Okay.
So when you come to us and you say, I want to invest money into these ETFs, we are essentially saying, okay, with the money you've got, how much is one unit worth based on the value of the index that we are tracking?
Right.
We then receive money, so you would go and get an account with one of your brokers. Now, generally, a lot of people tend to like using brokers that are associated with their banks. Then on their systems, they'll be able to say, okay, here's an AMI B50 ETF, I would like to buy this. Then on my side as a market maker, I say, I've got these units that whoever in the local market wants to buy, I will always then have enough stock to be able to give to them. On the back of that, I still have to go into Africa and go buy the actual shares that make up the units that are part of this fund.
Right.
So whatever returns the stock are going to have, we pass that through to the client. Whatever returns that we will have on the dividends, we pass that through to the client. And we do all of this through the ETF mechanism itself as well.
Okay. I'll throw around the word tracking error, which is in essence a means of how closely you match the index. What sort of target are you looking for? How closely are you looking at matching the index itself?
Right. So right now, as we speak, we have a 0.4% tracking error, which is very, very brilliant compared to what all the other ETFs do. So you look at your vanguards around the world. Because they usually trade in markets that they're already in, others are able to bring it smaller.
Right.
But we have the exchange rate factor that we have. We have the cash component factor that we have that will always create a tracking error in a lot of indices.
That leads me to another question, right? The underlying, you're investing on all these different markets. From a currency perspective, what currencies are underlying clients actually exposed to? I'm inferring you're exposed to whatever currency, the markets that constitute the ETF.
Yeah. So essentially, what a lot of people will be exposed to, they're going to be exposed to the currency fluctuations in each of the underlying markets, merely because the stocks in those markets are priced in that local currency.
Right.
Right. Then there's also the rand aspect of it. The whole entire ETF is rand priced as well.
Okay.
Right. So if there's any rand movements, it's gonna come through the index itself. If there's any big changes in currencies, so we'll see what happened in Egypt earlier on this year. We saw Egypt, they got devalued, especially after they received that IMF funding. They moved from about 12 to the dollar to about 18. That comes right through the index as well. We had this new window of opportunity that we have in Nigeria, where they said portfolio flows could come in and out, and then there was a fifth rate that was included. So whichever rate is then being used is the same rate we'll peg ourselves to, and that then flows right through into the index as part of the currency risk that is there for investors as well.
In terms of, I guess, fluctuations of the underlying companies
yes.
In and out of the index, is there an expectation on your side in terms of how frequently that will move going forward?
Generally, we are dealing with some of the most liquid stocks in Africa. So the fluctuations you'll get on a lot of these stocks are similar to the fluctuations you'll get on the JSE.
Right.
If you have some good news, i.e. Safaricom, say last month, they were told they could actually keep the M-Pesa within the Safaricom stable. Now, because Safaricom had been priced without M-Pesa at one stage by the market in Kenya, when they said, no, we can actually keep the M-Pesa right here, the stock price ran. Right. We had earnings season coming through in Africa now as well. So a lot of those dividends were actually getting priced in, and you saw us running. Right, and it does then change the composition of the index itself, and it does tend to change the values and the fluctuations.
Understood. In terms of the underlying companies, I get what you're saying. You're saying the underlying companies will be really a function of the fundamentals of the businesses.
Yes.
I guess my question was really around whether, you know, the constituents in terms of the names of the top 50, whether you anticipate the 51st largest stock rallies a bit and now becomes actually in reality one of the 50 largest. How do you manage that process, and do you anticipate that actually in terms of the businesses within the index, that will remain stable or not?
Okay, so generally it's various market forces will allow fluctuations to take place.
Right.
But those fluctuations will take place, and we have to rebalance again. If one constituent just all of a sudden became too big, and say one constituent became 90% of the index, because it increased its price, drastically.
Okay.
What we would then do on our side is that we have an index rebalancing committee, where we say, okay, these are the expected weightings based on the criteria that we have on our side.
Okay.
So every 3 months we meet up, then we run our methodologies over above that, then we get a new number. Then we say, okay, once the index is going to rebalance on a 3-month cycle, we have to rebalance, we then remap those weightings into the new portfolio as well.
Understood.
Right, just to make sure, you know, we don't give undue exposure to one sector, undue exposure to one country, and undue exposure to one stock.
Okay. In terms of appetite and demand for the ETF, what are you guys seeing on the ground? Are you quite excited in terms of how big this could get? Yeah,
very. I think on the excitement side, very, very big. So what you'll see is we get a lot of queries First, and a lot of queries are more on the education side. And we've seen a lot of people then on the back of that education actually taking up units. We've spoken to the, to the retail sector, and we have our marketing going out there. And the institutional side, it's more to say, okay, there are requirements within the industry on what you can put towards Africa. There are requirements on how much weighting you can give to products like ours. But working within the Reg 28, which actually governs a lot of the institutional investors in coming towards what they'll consider alternative investments. Right? To say, listen, now here's an easier way of being able to bring this in, and this is how your clients can actually participate on this. And we've seen a lot of them coming back. Of course, they need the details, you know, it's what is your tracking error, the question you asked earlier. They come and ask us and say, you know, it's what are your spreads that you're gonna have? And a spread is what you'll see on the market, and it's what I would have to control to say this is how much we're gonna buy at, and this is how much we're gonna sell at. So a lot of people have actually come through, and on a daily basis, we've seen our price actually mirror the index within the market itself as well.
That's an important point. In terms of performance to date, what does performance look like of the index itself, I guess, and in comparison, the underlying fund?
In comparison, so we're looking at about 9.68%.
In what currency?
Rand.
In Rand,
yes.
Okay.
Because we are Rand priced, this index.
Understood.
So a lot of people will remember when we first came into the market, we came in at about 12.22 costs included.
Right.
And as we speak right now, the last trade about an hour ago was at about 13.10.
Right.
So if we take the cost included over there, a clean little 9.68% has been in there, and it's driven by some real volumes. We're not as illiquid as most people would expect Africa to be. So we go and facilitate that illiquidity issue that they have in Africa by buying these units and allowing the market to dictate what the price will be.
Okay. What's the key, I guess, sales pitch for the product? Key sales pitch for the ETF? Is it the Africa growth story? Is it, I guess, the underlying characteristics of where the continent's going to go?
Yeah. Well, the most important thing first is to remind people that across the world and across all investment frontiers, Africa, excluding South Africa, has been neglected, and investors have only started seeing that now. So the interest in Africa has always been there. Right? The question a lot of South African investors were asking is, how do we then get to participate in this? Right? So a lot of them were still going to do the education and have the sales pitch to say, remember, there's higher GDP growth rates that exist in Africa, better than South Africa. We have a lot of stable interest rates in countries like Kenya, Morocco, and Egypt. These are mature economies that are really, really growing. And if somebody's looking for exposure outside the local rand, looking for exposure that is purely Africa, which is purely going to be last frontier, right? South Africa is not the place to be. And in any portfolio that you have, you want to diversify yourself to other opportunities that exist out there.
Thanks to my guest, Deon Kondleka, market maker at Cloud Atlas Investing. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team,